In August 2026, the baseline for the 12-mic plain film market in Ahmedabad appears remarkably steady. This digital gauge tracks current holding prices. Rates lock between 140 and 142 rupees per kilogram for companies, while the open market hovers between 144 and 145. Over the last 7 days, 0 official price changes occurred. On paper, the market is at a standstill. However, these static price points don't tell the whole story. They are currently masking several evolving factors in the global supply chain. Procurement teams looking only at these flatline metrics risk missing the specific pressures forming just beneath the surface. To find the source of that pressure, we have to look at the macro-level demand landscape and the current shipping environment. A significant industry pivot is underway. Fast-moving consumer goods companies are actively transitioning their packaging designs away from BOPP and toward BOPET. This migration is driven by cost. BOPET currently offers higher price stability and a lower relative entry point for high-volume users. Internal corporate approvals for this packaging shift have already been secured, and those directives are now being communicated to converters. When you add the upcoming festive season to this transition, we see a massive wave of new FMCG orders hitting the market simultaneously. This combination of structural material shifting and seasonal timing is rapidly consuming the available capacity of converters. While demand is accelerating, the supply side is tightening. A series of unexpected plant outages and planned maintenance schedules have recently limited the availability of raw materials. This shortage is forcing manufacturers to pay internal premiums in domestic markets simply to ensure they have the feedstock needed to continue production. The impact is already reaching the buyer, with many reporting noticeably longer lead times for their orders. Since feedstock costs are rising, these expenses are a leading indicator for a subsequent increase in PET chip prices. With manufacturers struggling just to maintain raw material flow, the supply side is ill-equipped to absorb the current surge in FMCG demand. This collision between rising demand and restricted supply is moving the market toward a significant price hike. This forecasting graph shows the projected outcome. We expect BOPET prices to increase anywhere between 5 and 7 rupees per kilogram in the coming days. This could happen as a single large price revision or through multiple revisions over a very short window. Because current raw material costs are dictating the economics of production, buyers should not expect any aggressive discounting from manufacturers. The official recommendation from Polymer Bazaar is to secure your inventories immediately at these current price levels. Today, proactive buyers are already utilizing our real-time data to execute this exact procurement strategy before the next major market shift occurs. To coordinate your procurement, contact our relationship managers at +91 93139 24365 or join our upcoming sourcing delegations at Taipei Plus, IPF Japan, and Coplas 2027. Securing your material today is a practical step to protect your margins against the volatility expected in the weeks ahead.